Today we're going to talk about the 4 phases of the real estate market cycle. You have phase 1, the recovery, phase 2, the expansion, phase 3, the overexpansion, and phase 4, the decline. Let's get into it. Okay, so a quick disclaimer. The real estate market cycle, it's going to be different in every market. Not every market is going to move the same. You may have one market where you have a recovery, while you have another market that's in the overexpansion. Not every market will move the same. However, when you apply this cycle to basically any market, you can see that this cycle is true and proves itself, as I said, in any market. With that being said, let's get into it. Phase 1, the recovery phase. So during the recovery phase, prices are at their lowest. We have finally found a floor. The aggressive selling has finally stopped, and people believe that the horror of the decline period, the decline phase, has finally ended. There's positive sentiment coming from buyers in the market. Buyers are stepping in to buy homes. Occupancy rates slowly begin to rise. Rents slowly begin to rise. And all the excess supply that was poured onto the market from the decline phase begins to be absorbed. Let's talk about phase 2, which is the expansion phase. So during the expansion phase, we have fully recovered and prices are starting to rise a bit dramatically. Prices are going up, people are confident, people are stepping into the market, and things seem to be clear again and positive again. We have just embarked on another bull run during the expansion phase. This is the sweet spot for investors to come in, buy property, and ride the wave up to the overexpansion phase, which we'll talk about in a second. So during the recovery phase, we've basically found the floor. We're at the bottom of the cycle, right? In the expansion phase, now we are more so in the middle of the cycle. New developments coming up, a lot of people buying homes, things seem good again. Okay, now phase 3 is the overexpansion phase. So the overexpansion phase is the top of the cycle. We have the expansion, the middle, the recovery, the bottom. The overexpansion is the top. So during the overexpansion, it is the easiest to get a bank loan. Just look at last year, right? It is the easiest to get a bank loan. During the recovery or the decline, it is the hardest to get a bank loan. During the overexpansion phase, prices dramatically jump from where they were. I mean, everybody's buying. People are buying just because other people are buying. Prices are going through the roof. Nobody suspects that the party will end. Everyone just keeps buying. Prices are going through the roof. Rents are going through the roof. Everybody is so happy about the increases in prices until inevitably we have phase 4, the decline. So during phase 4, which is the decline, there is a lot of supply coming onto the market and prices are falling rapidly. And the supply is not helping the fall of the prices. So what happens is you have a lot of foreclosed properties coming onto the market. People lose their jobs, people can't afford the payments, things get really difficult in the economy, consumer sentiment is down. So you have a lot of foreclosed homes coming onto the market. You have the overdevelopment that was present in the overexpansion phase. You have all those properties come onto the market, which further increases supply, which further hurts demand and hurts sales prices, and prices continue to fall lower. And keep in mind, development is a process. Some of these buildings take some time to be completed. So even during the recession, these buildings are still being built and more inventory is coming onto the market and hurting the market. So we have the recovery phase, which is ground zero, right, the bottom. Then we have the expansion, which is towards the middle. We have the overexpansion, which is the top of the cycle. Then we have the decline, which is our way back down. What goes up must come down. Any healthy market has its ups and downs, has the bull runs, the bear markets, the corrections. It's very natural, it's very normal, it's nothing to freak out about. You can't have prices here and continue to buy and buy higher and higher. Prices need to come down to give you a discount so that you can ride the wave back up. So from the decline through the recovery to the expansion phase is the best window and opportunity that you have to build real wealth in real estate. So you can see this cycle play itself out in business. You can see the cycle play itself out in the stock market. This cycle is present in every market. Of course, there are different nuances within each. However, this is how things work, economically speaking, and this is how you can gauge where things are to make better business decisions and investment decisions. If you have any questions, my contact information will be on the screen. And thank you for watching. Like the video, subscribe to the channel, share this video with anyone who could use the information, and I'll catch you next time.